Crypto prices tumbling this morning. Joining us now, Anthony Pompliano, founder and partner of Pomp Investments. When do you look at what's happening with crypto and decide that there needs to be a reason for what's happening? I mean, moves like this back to 61, watching Bitcoin for the last 5-10 years, the moves happen like this all the time. Do you have 3 reasons why Bitcoin has come down from above 70 to where it is now?
I think it's important first to put it in context, right? Bitcoin's up 40% year to date. It's up 100% over the last year. So in terms of volatility, this is pretty expected. What we've seen in previous bull markets is that there's 4, 5, 6 different drawdowns of 30% or more. We're down about 15% or so. So this is right within kind of the band that you would expect. I think that what occurs is when an asset goes up a lot, people start to take profit. And so what we've seen is this explosive rally to start the year. People naturally take some of that profit. We're also seeing a lot of people doing the basis trade where they're basically going long the spot market and they're shorting futures. And so what that is doing is it's dampening some of the volatility, which allows for leakage and some selling. And then lastly, I think, is we get to the summertime, right? You see this, a lot of people in the public markets will say, invest till May and then go away. And so you're starting to see some of that as well here, where people are seeing these really explosive moves at the beginning of the year. And then also Q4 tends to be a big kind of quarter for crypto as well. And so Q2 into Q3 tends to go kind of sideways. I think that's just what we're seeing.
We've noted that it has decoupled a little bit from just the risk-on trade and the NASDAQ trade. And, stocks have held up better than Bitcoin, even though the prospect of rate cuts is 5, 4, 3, 2. Now, I don't know where we are. We're at 1 rate cut this year. That's what Bitcoin really needed, was an easier Fed. That's what always juices it.
What I think is really interesting is, a couple of years ago, it was all about Bitcoin and crypto. Now, a lot of people are talking about AI, but I think people are kind of missing that these are actually part of the same trend. Right? We're going into this automated world where AI is going to create enormous amounts of wealth, and Bitcoin is going to protect that wealth. And so when you start to see these technologies coming together, an easy way to see that intersection is what money are the machines going to use?
Then why is it diverging?
Well, what you start to see is people are putting capital, they outlay it into Bitcoin, into crypto, and now they move over to AI, they'll go and they'll invest there. But it's not like Bitcoin is going and falling, 50%. What they're going to do is, as AI continues to, kind of get larger, there's more wealth generated there, people are going to look to protect that wealth, and I think that they'll go back into Bitcoin. And so my guess is that AI and Bitcoin are both a 10-year trend here. We've got massive tailwinds. And the good news for the United States is there's a potential that GDP will actually increase because of the productivity from AI, and then Bitcoin being able to protect a lot of this wealth. I think that people looking at this as what's going to happen day to day or week to week are missing this huge tailwind for the next decade.
So after the halving, maybe you get profit taking too. Is that part of what?
Historically, we've seen a run up into the halving, and then we've seen sideways to slightly down.
This is the first time you had a spot ETF, though.
Correct.
Are they have as much Bitcoin as they need now to satisfy clients?
No, I think that what we've seen in the ETF flows, when you go and you analyze it, about 80% of the flows into the ETF were actually retail, right? People thought it was going to be big institutions, but only 80% was retail from some of the analysis. What takes a long time inside of these organizations is they've got to go to their investment committees, they've got to make a case, they've got to go through the approvals. If you're a financial advisor, the number one job you have is don't get fired. And a great way to not get fired is to make sure you've done the work, make sure you're risk mitigating, and really understand what you're about to buy. And the last thing I'll say is, the thing about Bitcoin that always cracks me up is when the price goes down, people get upset. But I always tell them, you maybe should go check what you own. Because if you have true conviction, when the price goes down, you should be excited to go buy more of it, right?
And so
I was literally saying this morning that I'm going to go into the office, I'm going to go buy some more, right? And the reason why that's so important is as the price goes down, if you have a 10-year time frame, you're just getting it at a cheaper price. Your dollar cost averaging down. And so I do think that Bitcoiners, more so than almost any other asset class, historically they've bought, they've held for a long time, they continue to dollar cost average, and they're using these timeless investing principles to create real wealth for themselves.
I don't know, if you bought at 8, it's tough to buy at 60.
Well, if you bought at 8,000 and you still have cash, right, where else are you going to put it? I think that's the big question is if you want to protect your wealth and you're getting paid a salary every single year, that net new capital, where do you put it? You can put it in the stock market, you can put it in Bitcoin. But again, if you go and you look over a long period of time, what is beating inflation? Gold is a great example. Over the last 5 years, if you've held gold, you've actually lost purchasing power in real terms. Right. And so naturally, Bitcoin ends up being one of the only solutions that people are picking.